Hey traders, Jason here from Leavitt Brothers. In this video, I'm going to cover some trades from the software group. Okay, one of the keys to trading is maximizing opportunities. When a group gets hot and goes on a run, you have to take advantage of it. Okay, it's not sufficient just to play one or two stocks with average size positions. You have to push it a little and make as much as you can. Then when the market changes and there are less opportunities, you'll be able to sit tight and wait. Okay, software went on a big run recently. Let's go through some of the trades. All of these stocks were profiled at Leavitt Brothers. All right. So here's ZM. This is a stock I traded. The time frames here are the first chart is the daily, second chart is the 195-minute chart, so every 2 bars is a day, and then the third chart here is the 130-minute chart, so every 3 bars is a day. Okay, so looking at the daily, okay, first thing you're going to notice is, or first thing I notice is we have an MACD positive divergence. Okay, so the stock had taken a hit, gone down, done a double bottom, matched its bottom here, but we had a pretty big positive divergence with the MACD. So that puts it in play. Okay, you can see the stock bounces off a low and then trades in a range for a couple weeks over here. Moving over to the 195 chart, a couple things pop out to me. Number one, you see stock getting support here at the 50, gets rejected by the 200, drops below the 50. There's some resistance there. Comes up here, starts to get cupped by the 50, comes up here, gets rejected by the 200, comes down and touches the 50, trades through the 200 and takes off. Okay, on the 130 chart, similar sequence plays out. Okay, stock gets cupped by its 50, resistance by its 200, trades above here, one more test at its 50, and then takes off. Okay, so this is the stock I played. Again, it starts with the daily, positive MACD divergence, pops off the bottom, consolidates, and then I zoom in on several different time frames, looking at different moving averages on different time frames, seeing what moving averages are most in sync with the stock, and then I use that as my frame of reference to play it. So nice double bottom, moved off the low, consolidated, and then the next leg was playable. Okay, here's Twilio. All right, so what you see here is number one, you'll see the blue line here on the daily. It's the 50. Okay, what you don't see here on the left of the chart is that the stock rode its 50 up for several months. It traded through the 50 right here. So the 50 was resistance there, resistance there, resistance there. So obviously the 50 to me was very important. So over here, when I got above the 50, briefly dropped below and then came back up and then started to consolidate up here. That's when I said, all right, so we've had this pretty sizable pullback. I mean, from 150 down to 90. So the stock dropped quite a bit, rode its 50 down, but now it's starting to neutralize, gets above its 50. So here I'm thinking, hey, maybe that's it. Strong stock trends up for several years, pulls back. This would be considered a normal pullback within an uptrend, even though it was a big pullback. Now I'm thinking like this thing is going to reverse and go back up. So I come over here to the 195 chart, and what I see here is a stock comes up through the 50, gets rejected by its 200, comes down and tests the 50 again, goes below briefly, comes up, pauses, and then takes off. And another thing I see is just a resistance level here. So I can draw like a triangle pattern. So resistance is both at previous price highs and the 200 moving average on the 195 chart. Okay, zooming in, and then this is also the 195 chart, and I just wanted to show that after it got rejected, came back down, traded through it, then it rode its 8 EMA up. Okay, so again, looks good on the daily, trend change starting to take place. Zoom in with the 195 chart. I recognize a trend line resistance plus the 200 is acting as resistance. Once it takes out that 200, boom, we get a nice move from the low 100s into the 120s. All right, next chart, ZS. Okay, what I see here on the daily, Okay, this is a stock that, first of all, took a huge hit here, gap down here, and was basing for a couple months. You'll notice here double touch on the daily 50. Okay, so that puts it in play with me. We're starting to, until then it's just basing at a lower level. This could last, months and months and months. We get a double touch on the daily, starts to look more interesting. I zoom in with the 195 chart, 130 chart. Okay, and what I see here is I see a stock that goes above the 200. The 200 is red, comes down and tests the 200, comes up here and starts to get comfortable above the 200 and above the 50. The blue line is the 50. Okay, while this is happening, obviously same stock, so comes up, tests the 200, comes up, starts to get comfortable above the 200. So this is when I consider to be in play. Not really easily seen here as there's a resistance level here at 48. So the stock comes up, comes down and tests that resistance level, and then goes up. And that actually, it plays out here too, where the stock goes up, brief test on the 21, and then comes up. Okay, so again, I recognize it on the daily as double touch. Trend may be starting to turn up. At least, the very least, you have a very obvious place to put a stop. Zoom in on shorter time frames, see what kind of little dance it could do with various moving averages, see if you can get a frame of reference, and then when the stock consolidates here above a level that it is proven to be support, you get a breakout, a retest, and then it goes and it rides. In this case, it rode its 8 EMA up on the 195 chart. Same thing on the 130 chart. All right, next chart is Zendesk. All right, what I see here is, let me get my marker here. So on the daily chart, the first chart here is the daily. This is a sequence that I see play out. I really like it. It's something you should look for. Stock comes up here, gets rejected by its 50, trades through the 50, gets rejected by the 200, comes back down, does a double touch on the 50, moves up, consolidates here, moves up, pauses, and then trades through. I really like how the stocks do a little dance with several different moving averages, getting rejected by one, finding support at another, getting rejected by one, and then trading through that one. Okay, so while the stock was doing this in here, after it had done the little double bottom, okay, you can see here, little double bottom off the 195-200, comes up here, starts to get cupped by the 50. Coming over here to the 130 chart, you see that same double bottom on the 200, then it gets cupped by the 50 on the 130 chart, and then it takes off. Okay, you got a resistance level over here, and then you have another resistance level over here. Okay, this is another one that was profiled. This one that I personally played. Now, last one, AYX. Okay, so first chart here is the weekly, and you'll see the blue line here is the 50-week MA. So stock rallied, steadily trended up for several years. Big hit, dropped from like the high 140s all the way under 100. Found support here at the weekly 50. Not easy to see here, but there is a little bit of a double bottom there, a double touch at the weekly 50. So to me, I consider this is like big rally, come down, do a double touch on the weekly 50, and then reassert itself to the upside. Okay, zooming in, this is the daily chart. So I'm going to look at the 200 here. It's not really obvious, and I know it's kind of sloppy, but it's still something I see play out. I see resistance here at the 200, then support here, and then resistance there. Okay, so even though it's not traditional support and resistance, this moving average does seem to be coming into play. So when the stock can get above here and solidify itself, that to me puts it in play. And of course you can draw some trend lines in here just to give yourself like a frame of reference that, hey, stock rallied up, came down, double touch, price is getting squeezed by converging trend lines, find support at the 200. Let's further zoom in, see what we can find. This is the 65-minute chart. We have resistance here at the 200, pulls back, comes back up, resistance again, but then it gets above, gets comfortable here, and then it rides. It's 21 up. The orange line is the 21 EMA. So I didn't play this one. I guess I don't remember why. I guess I was just looking elsewhere, but still a nice sequence because you got a nice strong stock overall, comes down, does a double touch at the weekly 50, and then you zoom in and you can trade around the daily 200. And then zooming in with the 65-minute chart, you get more frame of reference here. Okay, thanks for listening. Hope you got something out of this. I find most of my picks on the daily, sometimes the weekly. Then I zoom in multiple time frames with moving averages, get a frame of reference. How can I gauge the stock? How can I judge it? Where's my entry? Where's my exit? Want the odds in my favor, want the wind at my back. And when you get a strong run like software just went on, where almost every stock in the group rallied, you got to push a little bit, make as much as you can, because then when things slow down, you'll be able to sit tight and say, hey, I just went on a nice run. I could afford to sit here and wait a little bit for the next round of good opportunities rather than pushing it. All right, so again, thanks for listening. You can follow my YouTube channel by clicking the red subscribe button right here on the page. Check out my Masterclass and trading class at the link below. See you next time.